It looks like gold is about to break out and move higher, and it doesn't take much to the all-time high. And after that, I think we're moving to $4,000 rather quickly. It's not a secret that over decades, at these Western Anglo-Saxon paper gold markets, there has been trading 150 to 200 paper ounces for 1 real ounce of gold. That's how the price finding has happened over the decades. And this is coming to an end. At the end of the day, gold is being remonetized, especially the East, but also more and more big players realize like, this gold position that I have here on paper, is it really there? Do they really have the gold? Technically speaking, we have the mother of all cup and handle patterns in the silver market. It's a 50-year pattern there in the making. And on a linear chart, we're talking $100 price target. On a logarithmic chart, we're talking $500, $600, $700 price targets for silver. And if we look at the gold-silver ratio, you can also definitely make the case for 3-digit silver down the road.
This is Little by Little with Andy Schectman.
Welcome back, everyone, to another episode of Little by Little. I am so excited to welcome on the show Florian Grummes. Florian is an independent financial analyst. He's a trader. He's an international speaker with over 30 years of experience in the market. He's also the founder of the Midas Touch Consulting newsletter, where he provides research and analysis on precious metals, on commodities, on digital assets, and focuses on gold and silver and cryptocurrencies and technical and fundamental and sentiment analysis. But Florian, you're not just about finance. You're also a lifelong music producer and composer, releasing tracks under the artist name La Florzino, I believe. And I listened to a bunch of it. I downloaded all of it, anything I could find. I've got to say, you're a hell of a musician. It is incredibly tranquil. It's real. How would you describe your music, I guess? Because I'm a big fan of it. And literally, I downloaded everything I can find. I started listening to it and was just blown away. I had no idea. You are definitely not a one-trick pony. So before we dive into the markets, share a little bit about your background in both economics and in music, please.
Sure. Thanks for having me, first of all, Andy. It's really a pleasure to be here. Well, my background is really indeed in music. So that's where I'm coming from. I started as a DJ in the early 90s, figuring out that I didn't want to play other people's records. I started buying an Atari and a sampler, and the next probably 5 to 8 years, you found me behind those machines, learning, studying how to produce, and become a producer, an audio engineer, etc. And by the late 90s, early 2000s, I was rather successful in the music business. I was involved in a few number one hits here in Germany. And I brought the money to the bank, so to speak, assuming that they would take care of. And quickly, sadly, I had to learn that they just, were pushing products on me. And basically, they screwed up 50% of the portfolio during the new economy bubble, the burst, the internet bubble in 2000, 2001, the nasty bear market back then. And on the day I asked them whether I could buy some gold, they basically looked at me like if I'm nuts. And how was it possible that I, with 25 years in 2001, had the idea to buy gold? Well, there's a longer story to it. My grandfather, who died 3 months after my birth, I never met him in person. He left me a letter with a rare American gold coin and wrote that this should be the foundation of my future wealth. And I received that letter as a young boy. Immediately, somehow, he programmed my brain to assuming that at some point in my life I needed a boat full of gold in Switzerland. But I never met him, but he managed to basically transport or transform this very important information about precious metals, gold, etc., over one generation, because my father was not really interested in these kind of things, towards me, even though we never met. So in 2001, thanks to him, I was remembering his message, I went to the bank, said I want to buy gold. They looked at me as if I'm nuts. I decided on that day, okay, I'm out of here. I take this in my own hands. And I started buying gold on eBay, because back then, most, if not all, of the gold shops and gold dealers had shut down in Germany. It was completely out of fashion. It was a 20-year bear market, as you know, in the 80s and 90s. So it was rather difficult to find a serious professional dealer. It took a few more years, and then the scene exploded in Germany. Nowadays, we have dealers everywhere. It's a very established kind of market sector nowadays, but back then it was not. So I bought my first Krugerrand on eBay, and yeah, once you hold a physical, real ounce of gold, a gold coin in your hands, there's no turning back anymore. So I went down the rabbit hole, started studying the markets, technical analysis, of course, but also everything about sound money, the history of money, the Austrian National School of Economy, of course, et cetera, et cetera, et cetera. And I started investing, trading, speculating, bought mining stocks at some point, started also commodity trading. And yeah, that's now 25 years nearly ago. And I never looked back. And at the same time, my music career changed. I decided not to do any more this commercial kind of pop music thing, but I really wanted to create something that has more of a lasting value. And I started creating lounge, chill out, spiritual, new age kind of meditative music. And I have a catalog of about 200 tracks, and many of them ended up on Café Del Mar, Buddha Bar compilations, etc. Unfortunately, the last 10 years since the arrival of my first daughter, I didn't find a lot of time anymore to really be creative in the studio. But the music is still there. So if I would die tomorrow, I could show up to the dear God and tell him, look, I don't die with all the music in me. So that's the background, of course. And once you start studying gold, there's no turning back. And my music kind of like background probably helped me to be open-minded enough to look at Bitcoin when it came around 2011 and 12. While most of the gold bugs were not interested or not willing to even take a more serious look, I started buying into it rather early on, and then also added this to our research. And that's the two main asset classes that I'm looking at these days. For many years already, I've been always in the camp of you want to have both. It's not an either or kind of decision. You can hold and be bullish on gold, and at the same time hold and be bullish on Bitcoin. And that's been my mantra for the last, I would say 8-9 years already. So yeah, that's basically my background. Not the typical kind of background, but yeah, that's who I am.
Yeah, I thought I saw you poking your head down the rabbit hole. I've been down there for 35 years. I'm like, is that Florian coming down the hole? But much like your music is timeless, and it is. It's really, really, really good if you like just mellow, chill music that you can turn on and listen to and relax, meditate. It's spiritual. I'm very, very blown away and impressed by it. But much like that's timeless, so too was the advice your grandfather, a young man growing up in the Weimar Republic, would give to you. A man who watched the currency that once had substantial value turn into nothing, worth less than the paper it was printed on, where people supposedly would go to the store with a wheelbarrow full of Reichmark to go to see if there was bread in the store, only to come back and find the wheelbarrow stolen and the Reichmark laying on the ground. For him to send you that letter, to give you that old gold coin, I'm assuming it's probably a $20 gold piece or something along those lines, because all debt prior to World War I was settled in gold. It's very deep. I look at that as having massive symbolic meaning, and to convey the wisdom to future generations that, hey, this happened here, it can happen again. You need to understand what real money is very cool to me, and something I damn well intend to do for my grandchildren too. And that's a really cool story. I appreciate you sharing that. And I would advise everyone just to check out his music. It's really good. I think you'll like it. But thanks for sharing that story. It's cool. Let's jump into things.
Maybe
man.
just let me quickly add something here.
Yeah.
So I think that's really important, actually, also out of this story to understand for the people. Imagine 1975. Okay, he could have gifted me some stocks, or some cash, or some other form of investment. I think not one of those investments would have made it until today.
Mm-hmm.
Right? If he
Yeah.
would have handed out some cash, my mother probably would have quickly spent it on diapers in the first few months.
Yeah.
Or latest, when I was maybe 14 or 18, being allowed to spend that money, I probably would have spent it
Of
immediately.
course.
If he would have gifted me some stocks, I mean, what would have he bought in 1975, right? Maybe Kodak, I don't know. Probably, very surely, a stock that is long gone, out of fashion, maybe bankrupt, not existing anymore. Who knows what the bankers would have done with it? If he would have gifted me some savings in a bank account, inflation would have completely eaten it up, right? So it's very fascinating. And most important, it was very easy to hold on to it until today, even for a little baby with no clue to it. Right? Even with 25, I had no clues about the markets, no clue about investing, but it was very easy to hold on to it. So I think there's so many things you can actually learn out of that story. It's unbelievable, and that's really the beauty and strengths about precious
Do you
metals.
still have it?
Unless, of course, I have it. I would never sell it.
Well, and that's the story I often tell, Florian, is that gold has sentimental value. Grandpa did this for me, accompanied it with a note telling me about the way the world was when he was a young man, and it has tremendous amount of intrinsic value. In 1975, that would have been worth about $40, if that, 35 or $40. And today it is $3,400. It's appreciated quite a bit, to say the least. But that is a lesson that I have been trying to tell to people forever. There is no better way to pass money on to your family, period, as far as I'm concerned, than something of right. that nature. And again, I really do appreciate you sharing that story. It's very important, and it really, I think, exemplifies the plurality of uses that gold has. It's not just used as a form of savings or as the backbone of a central bank holdings, or any of the things we're told that gold is not for just jewelry. There's a lot more to it. You had mentioned offline that your grandfather buried it in the garden. He was a midnight gardener, who also explains that physical possession is important, that it's an asset that is simultaneously not someone else's liability. And so there's so much that I take away from what you just said. I hope people did as well. I want to jump into the markets and ask you, we're in the middle of the summer doldrums, and in 36 years of selling gold, I understand the summer doldrums very well. Talk to me about what you see going on in the markets right now, and in particular with the summer doldrums. Are there opportunities that people are maybe overlooking, or what's your take on the markets right now in general?
Well, I mean, here we are, end of August. Everything's a little bit slower. That's totally normal. People should actually spend this time in the summer with the families at the beach or at a beautiful place, taking off and like recharging, right? So nothing to worry here. Of course, last week, the big Jackson Hole event kind of like created some volatility in the markets, but I would not overvalue all these statements. I mean, in the end of the day, it's the price action. The market usually is dictating what the Fed is in the end of the day doing. So we have seen gold consolidating now since end of April, more than 4 months, healthy consolidation on high levels. I think you and I agree that we probably both have expected maybe a bit more of a deeper correction back in end of April, when it rushed to that new all-time high at 3,500. But all the market gave us was a low at 3,120. And already that looks like a buying opportunity in hindsight, because gold is trading nearly 10% higher. So it's holding up really well. I think it's strongly supported by the physical demand out of China and Asia, of course. But I think also slowly but surely the Western big money, so to speak, is waking up to the fact that gold is the last man standing. And it's a clear bull market in comparison to all the other markets. You have a very strong, clear bull market in gold. And I assume that it's just a question of time until we see the next leg up. Gold is trading in a tight trading range. It's getting tighter and tighter. Over the last few weeks, it's been less than $100. We had some days recently with less than $10, $15 of a trading range. And it doesn't take much for gold to break out. I mean, already 3,400 is already the next probably buying signal here, if pro-cyclical buying signal, if it breaks above that, and it just takes another $5 from you as we speak. So it looks very bullish. It's been holding up very well. It's, I think, the most interesting and exciting market. It reflects not only the things that we just talked about, historically speaking, and when it comes to value investing, etc., but of course, it's also a geopolitical, in-depth kind of story that you can read if you look at the gold price and its development. So I think it's all looking very, very positive and promising for gold here. Usually these consolidation periods end with one little bear trap. You get one little quick nasty sell-off that shakes off all the weak hands, and then the market turns around violently and rallies hard to the upside. Maybe that's still around the corner in September, but I don't see any big downside here. I think I wrote this in Gold We Trust report in May already. I said gold is most likely not coming below $3,000 anymore, and here we are. And it's holding up very well. The only situation where I could see a little bit more of a challenging times ahead is really if the stock market would get into a deeper correction, something maybe that like we've seen in January until March, with the big final panic kind of in the last days of March, early April. But whenever this liquidity suddenly disappears, and then of course gold and silver prices are also affected in the short term, but whenever this disappears, the liquidity, magically a few days later it reappears and shows up again, and then it's a buying spree within a 2-week kind of, everything changes, and 2 months later you have new all-time highs in the stock market. And of course gold and silver is also strongly moving higher. So remember that sell-off that quickly led to silver falling below $30 actually was the launching pad for that 40% rally since then in silver. So it's always this mass psychological phenomenon. It's sometimes hard to time, but usually you can see in the charts more or less what's around the corner. And here we are. It looks like gold is about to break out and move higher, and it doesn't take much to the all-time high. And after that, I think we're moving to $4,000 rather quickly.
Well, that would be killer. And you mentioned slowly but surely, or little by little, then all at once. It's the same thing. We're beginning to see these things happen, and I love what you just peeked around the corner, and you're seeing 4,000. That would be amazing. You know, you mentioned that the central banks are aggressively accumulating gold, and I would add to that at record levels. Do you sense a similar shift beginning to take shape around global digital assets like Bitcoin? Or do you see these forces diverging from central bank holdings we're talking about? Do you think Bitcoin will be adopted similar to the way that gold has, at least in the central bank circles?
I don't know. It's an interesting question, obviously. I mean, if we look at the facts, neither the Russian, nor the Chinese, nor the Indian central bank is buying Bitcoin proactively. Neither is there any of the presidents of those countries claiming that there should be a national Bitcoin reserve. It's surely now the Americans moving in that direction, thanks to Trump. I mean, the regulatory changes have been impressive and unheard and unseen of. And given what has taken shape in the sector, in the digital asset and Bitcoin sector over the last less than a year, I would say it's actually disappointing where Bitcoin is trading. But of course, it's a more and more maturing asset. I think these 10x in a few months is probably not happening anymore. It's a big market now. Wall Street has embraced it. And I think that will continue in America. Europe is still lagging. They have no clue. They have actually no recipe at all for it. They're rather overwhelmed with this whole topic. I don't know. It's an interesting question. I would throw into that discussion actually. Look at this recent escalation. It's just 2 months ago, by the way, the recent escalation between Israel and Iran. What did we learn through this rather frightening time? I mean, I actually evacuated, so to speak, my family rather quickly from Dubai back then, because I thought like this might get a little bit more worse, but it ended up rather quickly, and I assume it ended up quickly because the West had to learn that the East has like massively advanced rockets and missiles and weapons, and is actually ahead of us technologically speaking. So, um, and then throw in AI and how much this is evolving and developing, and how quickly this whole thing is like progressing. I don't know how the Bitcoin maxis are actually can still claim that Bitcoin will take over gold very quickly. I don't see it. It's a thing in the West. Trump wants to make money in the end of the day and hopes that this maybe will save America. But I think it would be better to have a strategy that really also includes physical assets like gold and silver much more, and not only the digital ones.
It's funny that you say that, and I think I actually respect you more for having an open mind. You're someone who's been buying Bitcoin for a long time, done very well in it, but you understand it doesn't have to be one or the other. That doesn't have to be mutual exclusivity. And this is why one of the reasons that I'm so thrilled that Michelle McCory is here with us now, because she understands that. And in fact, she'll be emceeing a Bitcoin conference in Asia next month, and so she understands Bitcoin, she understands precious metals, and I think the two communities largely see the world similar. They go into the door for the same reason. One goes this way, one goes that way, looking one for profit, one for preservation. But not only do I think our portfolios are stronger with a sampling and understanding of both, but so too is our understanding of the world and of monetary affairs. So I think your point is not only well articulated, but I think it's spot on. Shift gears just a little bit and talk about signals and stress. We've seen a massive spike in gold and silver deliveries into COMEX vaults, and we've become a net importer of gold. Vince Lancy, someone I respect an awful lot, came out recently and said up to 85% of the gold being delivered around the world is not being reported to the IMF, and he might be right. In fact, I'm sure he is right to a degree. I don't know if it's 85% or more or less, but the point that he makes is certainly not lost on me. Much of that metal is actually being offloaded from the exchanges. This is a big difference, not just delivered into the eligible category on COMEX, but actually leaving the vaults. And this is something that we've never really seen before. At the same time, these same central banks are holding gold and demand from places like you said, Asia, India, Russia, Saudi Arabia with their big purchase of SLV the other day. This is all rising sharply. To you, Florian, do these delivery trends signal something about the stress in the system or something deeper in terms of gold and silver perhaps being integrated a little bit more into the monetary fabric? What do you see when you see all of these deliveries? And I would just like to highlight one thing and say, during the majority of my career, which goes back to 1989, 1990, less than 1% of contracts stood for delivery. And when I was looking at the first 3 days of the August contract on COMEX, just the first 3 days, 20,165 or something like that, contracts posted. Now, normally those contracts would either roll over, cash settle, and maybe 1% would stand for delivery. Of those 20,165 contracts, over 2 million ounces of gold, 100% of them stood for delivery, 100%. Now we're over 30,000, I think, for the month, and I don't have the rest of the numbers. But do these deliveries and the fact that some of it, a lot of it, is actually leaving the exchange, same thing we see happening in the LBMA, what does this say to you about the system right now?
Well, it just clearly tells us that gold is being remonetized, right? And I mean, there is a leveraging on in this paper gold market for now, I would say probably at least 6 to 8 months, intensified the deleveraging. And it has clearly been driven by the strong physical demand out of China. I mean, it's not a secret that over decades at these Western Anglo-Saxon paper gold markets, there has been trading 150 to 200 paper ounces for 1 real ounce of gold. And that's how the price finding has happened over the years and decades. And this is coming to an end. And it is not a thing that is coming to an end over one day or one night. it apparently is kind of like a salami crash kind of thing here, or a salami deal pitching probably years. And it drives prices higher in the end of the day. Gold is being remonetized, especially the East, but also more and more big players realize like, oh, this gold position that I have here on paper, owning a gold fund or owning allocated gold in some warehouses or vaults or with some banks, is it really there? Do they really have the gold? I mean, these are the questions that people are asking themselves now for quite a few time, and everyone who has such a position surely uh, little by little is obviously trying to get his hands on the real physical gold, and that's why they sell those paper gold or allocated gold positions and try to get the real stuff. I mean, that's what in the end of the day is going on, and I don't think that we are anywhere near the end of that. I think this will take a long time.
Maybe they listened to your grandfather and are starting to bury it in their gardens as well, removing all of that counterparty risk. And that's the whole premise. I think, to your point, I think these countries are not trusting of the Western system anymore, and say, we're just not going to hang on to the paper side of things. Please give us the real thing. And that's the part that I think, to your point, whether it be remonetization or not, but this is where, which I agree, but where real price discovery comes in, where it's, and where the rubber meets the road, frankly, where you do not have the ability to rehypothecate, to trade so many contracts off of a single bar. When no one ever stood for delivery, it was easy, right? But when everyone's standing for delivery, a different story. Very, very cool. Let's talk about silver for a minute. David Bateman, he's a billionaire, and he's shown on Twitter, on his Twitter page or his X page, the warehouse full of silver that he took delivery of. Again, removing counterparty risk. And I want people to know that we have 9 vaults around North America, all with Brinks. One of them is a COMEX facility, just one of them, and that's JFK Brinks. And I have a client with over 1 million ounces of 1,000-ounce bars at Brinks JFK. She wanted to store it at Brinks Salt Lake City. And my Royal Canadian Mint distributor, who has them stored at Brinks JFK in the COMEX ecosystem, they're eligible bars, said, no, you don't want to do that. She doesn't want to do it. Well, why? Because if they move to Salt Lake City, then they're no longer in the COMEX ecosystem. Now think of David Bateman's bars in his own warehouse. I said, but that doesn't make sense to me. I said, if they're in the COMEX facility, in a Brinks facility, and they get loaded onto a Brinks truck and get moved to another Brinks facility in Salt Lake City, Utah, wouldn't it still be under the same chain of command? He says, no. Once it leaves COMEX, it's out, and it would have to be reassayed to come back in. So you look at a guy like David Bateman, who's got all of this silver. He doesn't plan on sending it back anytime soon. I think it's interesting when we see, and I use that in terms of all the metal that is being delivered off the exchange. Once it leaves, it is not easy to get it back, and most of it, now his may go back someday, but most of it, I would argue, is not going back, and that's something people should think about as they let this marinate a little bit. But anyways, he just came out and said that if just 10% of the gold investment globally, that demand shifted into silver, it would wipe out all the available annual mine supply. So again, thinking of COMEX delivery patterns or what we see on the LBMA, does this suggest that we are moving closer to that kind of either a structural crunch, a squeeze in silver, or are we seeing silver being remonetized as well, just not backing the system? The U.S. government just changed it, and they changed it from, I'll give the exact terminology, they change it to a critical mineral, a classification that aligns with other critical minerals like copper and lithium. It's no longer just an industrial. Is something bigger going on with silver in your mind as well, is what I'm getting at?
I think so. I mean, silver is, I think, the only commodity that is still way below its 1980 high. We know that silver is always lagging in precious metal bull markets, and then suddenly shows up dramatically towards the end of such a bull market. So I mean, I'm the first one to admit that I thought we would get a bit more of an impulsive rally in silver in spring, early summer. That was my expectation. I thought we would probably have seen $50 already. But if I may reassess now. I think it's actually good that it takes more time because it tells us the whole bull market in precious metals has more time to go. And so I appreciate silver rather slowly and little by little creeping higher here and not like going completely berserk, which we usually always see at the end of a rally in the price action. Of course, we know that silver is being used in many important technological products, and of course, that's also very important for the future in terms of data centers, in terms of AI, in terms of you have this special solid state battery around the corner, etc., etc. I mean, the list is very long, and we know at the same time the supply and demand. See, the silver market is very tight. We know that there is not a lot of new mines coming on at all, if at all. Most of the time, silver is just a byproduct, and then it doesn't really matter in the whole production scheme of a big mining company. But I think everything's on the table. We just have to be patient. We have to be appreciative of these prices below $40. I think once it takes out $50, it can happen rather quickly that we rally towards 75 and then maybe $100. And technically speaking, we have the mother of all cup and handle patterns in the silver market. It's a 50-year pattern there in the making. And on a linear chart, we're talking $100 price target. On a logarithmic chart, we're talking $500, $600, $700 price targets for silver. And if we look at the gold-silver ratio, you can also definitely make the case for three-digit silver down the road. So I appreciate that it takes more time because that gives us also more time to still buy more. And silver is still very undervalued here. And the whole mix that is kind of like cooking here, all the ingredients that you just mentioned, it's just a question of time. And again, I appreciate that it's a little bit slower than maybe people wishing for, to be honest.
You know, one of the things that I appreciate about you is your open-mindedness, and you've exhibited that already. And maybe that has something to do with being creative with music. You aren't just robotic in your analyzing of things. You have more of a creative mind and an open mind. One of the reasons I say that is that I know that I don't know to what degree, but I know that we've already talked about rehypothecation and the manipulation. And some like myself would argue that this is part of the reason that metals like silver underperform, even despite strong fundamentals. So, you know, assuming that manipulation really does exist, and I think you believe it does, the Western central banks have done a great job at holding down the price, and I have reasons why I believe they are. We won't get into that. People following me enough know exactly why I believe the metals, both silver and gold, for different reasons, have been suppressed. But let's just give as a given, do you see a point where these possible manipulations could backfire? For example, too many players stand for delivery on COMEX, or if central banks continue draining Western vaults, what could the consequences be? And I will paraphrase or highlight the LBMA, which, you know, is a T+1 settlement. T is trade day, +1 is settlement. On the third day, the bar should be moving. Good portion of this year, they said, shortage of manpower and trucks at the Bank of England. It's now T+8 weeks. Do you see a possible moment where there are some serious consequences for these players, these naked short positions? What would that look like, and what do you think the likelihood of that happening actually is?
I don't know if there are any consequences. I mean, so many people nowadays get away with stuff. It's unbelievable. I mean, we don't open that box. But I think what you just mentioned is always the case. They change the rules, right? I mean, that's in the end of the day always the end game. And it's the classic also monopoly rule. The bank always wins. And if it doesn't win, they print more money so that it can continue playing. So they will change the rules and print more money, print more fiat, to be precise here. I think that's what's going on. And most people accept it. And most participants are actually not in the position to go against it. I mean, it would take years of trials, and you know how those cases usually end. So I think it's just a higher price and more fiat money printing. That's in the end of the day the result of it. Even though I
And
would
less
like to
naked
see
shorting, maybe real price discovery, maybe.
yeah, I mean, I think we are already seeing real price discovery. I mean, if you look at the price action nowadays and compare this to what we've seen even in the first bull market, 2001 to 2011, you don't see these waterfall kind of like sell-offs and then multi-months kind of like gold not doing anything. It's always coming back very quickly. It's very resilient. Even though you see those $100 sell-offs, it takes a few days or maybe at maximum 1 to 3 weeks and gold is back up at the highs.
That's a
So
good point.
it's not working anymore, right? So I think the structure has changed. I think the price action has changed. But still, I mean, there are classic kind of cases like option expiry of a month at COMEX. It's like they're trying to down in a favorable position so that most of the options expire worthless, right? I mean, that's the classic kind of scheme.
Rinse,
It's
wash,
still
and
kind of
repeat.
like yeah, every second or third month, it kind of like still works, but it's a short-term phenomenon. I remember the first bull market 2001 to 2011 in which I participated. I mean, there were like 1.5, 2 year kind of like breaks in between where gold went nowhere and it got beaten down every Friday afternoon in Germany when the New York COMEX opened up to trading, etc. So I mean, we don't see that anymore. Even during the US session, usually gold is actually moving higher and not lower. So I think the market has changed, and you can see exactly those points that you made. You see it in the price action. So it just unfolds maybe slower than we all expect. I mean, usually gold bugs believe somehow in the end of the world and everything has to end up. But it's probably just the famous classic story of the frog in the hot water. So it just slowly but surely,
Or little by little.
Yeah.
You know, it's funny. I remember there was a guy named Dimitri Speck, and Dimitri used to publish charts.
Exactly.
Yeah, and he did a one graph of 10 years worth of data back then during that market, and he would show the AM fix bleep, and the PM fix bleep into New York, and like 52 out of 58 Sunday nights when the market would open in Asia, straight down. And you're right, we don't see that anymore, and the resiliency is incredible. Actually, you're right, and the corrections can still be sharp, but much more abbreviated. I like your take on that, and while you still acknowledge that there is suppression and manipulation, perhaps the physical demand at that level is shortening the duration by which we see that. I'm good with that. I got two more questions for you, brother, and I appreciate your time. You're a fascinating guy. I'd love to meet up with you when you come stateside someday and share a couple glasses of wine and talk about music and about economics and about Grandpa, because he gave you some real solid advice, like deep solid. It actually gives me chills thinking about it. Seriously. Let's talk the next 12 to 24 months. You look out over the next year or two and, you know, you got a gun to your head. What do you see for the gold and silver prices? And is there a catalyst or two that you may be watching closely, or just more of the same? Where do you see the metal going over the next year or two? And I know that's kind of an unfair question, but I don't know. I'm sure people would like to know.
Yeah, I mean, obviously, I don't have a crystal ball.
Broken?
I think we, well, I think we are in the bull market, right? So the surprise is clearly to the upside. Uh, Usually, those bull markets end in total euphoria. I don't think we are there yet at all. I mean, you don't have your taxi driver and your grandma telling you all the day to buy gold and silver.
Your grandfather did,
So
though.
I think yeah, but my grandfather mom has not called me telling me
All right,
to buy
right on.
gold and silver. He just bought. I mean, it's another one for like usually the Joey come kind of late guys. I don't see them moving into gold like euphorically right now. I think there's so much going on in the world of investments and so many other topics. Of course, Bitcoin has taken away a lot from the gold cake over the last 10, 15 years, and the tech stocks. And also, I think many people just don't have as much money anymore because inflation and all these difficulties during the COVID period. It's a complex kind of setup that we have here, but we are in a bull market in precious metals. I think the best is yet to come. usually at the end of such a bull market, you see that asset doubling within a few days or weeks. That's usually the signal where, oh, now it's really the top. We want to be careful and probably move into something else, but we haven't seen anything like that. I think that the Western world is in such a dire shape that money printing will prevail and even intensify over the 12 to 24 months. And that will push every asset overall higher. So I've been calling this the cracker boom for many years already. And I also described it before a little bit, like you have, in the end of the day, the depreciation of your fiat money is making sure that most of the good assets, or more or less good assets, are rising over time. So your real estate is becoming more dollar in euro. Your stocks, the good stocks at least, or the better ones, or the ones that are being chased through the village right now, are moving higher. And of course, precious metals and Bitcoin as well move higher overall. I think we're going to see a lot of volatility. I think that, and that's, by the way, if you the Weimar Republic hyperinflation, you can see how dramatically the volatility increased in the years between 1921 and 1923. So something like this is very likely, and we probably will then also see $300, $400, $500 swings in the gold price on a daily basis. But we're not there yet. That's why we should appreciate these rather quiet times right now. I think gold is probably on the way to 4,000 and then 5,000. I mean, these are the round psychological numbers. Obviously, we are in uncharted territory above 3,500. And then I think down the road, yeah, I'm more or less in the camp of 10,000 gold at some point over the next few years, simply because I assume that the money printing, the fiat money printing will continue and intensify. The only worry that I actually really have is this whole digital surveillance kind of thing and the digital central bank kind of money that they try to push on us. That's my main worry, actually. And it's very hard what to make out of it, to be honest, because it can theoretically mean that at some point we're not able to buy and sell our precious metals within these currencies anymore. And we have to maybe go back to black market kind of situation. Who knows?
Well,
That's the worry.
It's interesting. I left my corporate office in Minnesota, even though we've had a satellite office for almost 2 decades in Florida, because it's the only state, Minnesota, that regulates the precious metals industry in the United States, which is federally non-regulated. It holds us to a higher standard. So we take all of the classes from the IRS-based classes, and KYC, Know Your Client, AML, anti-money laundering legislation, and the rules behind it. And I was listening to your point, an interview conducted by the gentleman who is the CEO and also the developer of BRICS Pay, which is their BRICS business to business, the B2B. It's the retail side of things for the BRICS nations. In fact, they're rolling it out to the Belt Road Initiative right now, which is 75% of human population in 150 plus countries. The only reason I bring it up to what you're saying, and then I'm going to let you go here, is that, the interviewer said, well, I think his name is Dimitri. He said, Dimitri, you're rolling this out to all of these countries, effectively the majority of human population, with the exception of the UK, the European Union, and the United States. But, there are terrorist organizations out there. How do you know you won't be allowing your platform to funnel funds to terrorist organizations? And he said, because we're opening it up, not just to the BRICS nations, but to the Belt Road and others, we're very sensitive to regulations. And he said, this software is embedded with KYC, Know Your Client, AML, anti-money laundering, and KYT. It's compliance. And I'm like, well, what the hell did he just say? I take all these classes and have for years. No one else in this industry does, unless you're in Minnesota. And I had to rewind it. And then he goes on to say KYT. And a few seconds later, he says, know your transaction. So to your point, when you talk about stablecoin legislation, I would argue that this stuff, as advanced as it is, will have the AML and KYC. That for sure they have. Know Your Client, anti-money laundering. Who are you? Where'd the money come from? But to your point, and we've already been told by the developer of BRICS Pay, know your transaction. So this is maybe why when people go to the bank asking for $5,000 cash, because you're going with some buddies to Las Vegas, they say, well, what do you plan on doing with that cash, sir? Well, none of your damn business. Well, now there's KYT, evidently KYT, know your transaction technology built into some of this software. So I echo that. And again, I think we see things very similarly. And I think that is a scary part where privacy is out the window. Another reason to follow your grandfather's advice and bury your gold in your garden, become a midnight gardener, because gold in your own possession, or any asset, whether it be cryptocurrency or commodities in your own possession, are assets that are not simultaneously someone else's liability. And ask the folks in Venezuela about that when they asked the Bank of England back for their gold. No, you can't have it. So very wise,
Right.
sage advice. Florian, you're awesome, brother. Thank you for sharing your insights. Where can my audience follow your work and learn more from you? And also, where can they get your music? Because it's fantastic.
Thank you, brother. I really appreciate it. I really enjoyed our conversation. Well, folks can go to midastouch-consulting.com. That's my website. I usually publish all of our research there. We have daily, weekly, monthly, in-depth gold, silver, and Bitcoin research, and it's all free of charge. You can also subscribe to me on Substack. You get daily calls on gold and silver in your email box for free. And people can also join our Telegram channel, which is also free and is basically a mastermind group of investors and people from all over the world. It's all in English. It's international, and you meet like-minded investors interested in gold, silver, the mining stocks, of course, but also into Bitcoin and digital assets. And we have great conversations, and all my content gets posted there.
How about the music? Where's the best place to download your music? I just went and typed in your music name, and Florzino, right? Is that correct?
Flozinho, yes.
Yes. And I
Flozinho.
found it. But is there a better place? Because I just found right there. Is there a better place to download and listen to what you've done in the past?
Well, it's basically available in all the big music stores. So you can go to Spotify, YouTube Music, YouTube itself, Apple Music. These are everywhere the music is available. Flozinho. And I have lots of projects. I've actually written and recorded lots of songs in different languages. I've done one in German. Hopefully we'll do this at some point in my life. But so far, very multicultural kind of songs from all over the world. And
Way to go,
especially with the, of course, I'm a big fan of Brazilian bossa nova music. That's basically my main background when it comes to music, and that's heavily influenced me in my.
Florian, a man of many talents you are, my brother. Thank you for coming on. I really can't tell you how much I appreciate it. I do hope that we can do this again, but until then, I will certainly be looking forward to it, and I hope you stay well. If you ever make it stateside, and in particular in Southern Florida, please look me up. I look forward to meeting you in person, but until then, I hope you and all of yours stay well, and thanks for tuning in, everyone. I hope you enjoyed this as much as I did, and we'll see you again real soon.